Hey everybody, it's Monday the 17th of September 2018. S&P 500 pulled back here a little bit. We are currently right on the conjunction of the volume weighted average price from the low, that's the blue line, and the volume weighted average price from the all-time high, that's the red line. So if this market is going to stabilize, this is the time to do it. We've pulled back deep enough at this point. I think we need to add a volume weighted average price from this gap as well, and it's going to need to get back above here on an intermediate term basis and hold above there for this market to be considered bullish once again. So we've turned a little bit cautious here, and it's not a major reason for concern, but the daily time frame, maybe we're getting a little bit tired here. If we don't recover, perhaps we'll pull back down towards this trend line once again, the horizontal level, that is. The Nasdaq showed a little bit more reason for concern here, and this market is right back on that trend line that we had been talking about, and the 50-day moving average. You can see big red candle closing right at the bottom for the day of the move here today. The market dropped back below this volume weighted average price from the peak and from that recent low, held under there and found resistance for a little while. That's also the volume weighted average price from this low last week. So in order for this market to become bullish in the intermediate term, or actually neutral, we're going to need it back above 182.75 and holding above there, because right now this is looking like a breakdown that we need to take a little bit seriously. The potential move lower here could be taken by a measured move, and we'll measure this very conservatively as a high of 187 down to 180 and a half, meaning that we'll call it 6.5 points. If we took 6.5 points and subtracted it from this level right here, that would bring us down to 178. So a measured move from this being point A, this being point B, this being point C, would bring us down to about 178. You also see that we have the volume weighted average price from this little move lower. So I think that 178 to 179 is where this market has the potential to drop to, the NASDAQ. So for tomorrow, if we were to see something like this, maybe a flush below this level and then rally up and then the next move lower, or if it was just to rally up a little bit in the morning, find resistance, I think that you could probably look to get some short exposure here in the Nasdaq. So looking a little bit like we're ready for some profit taking. The Russell 2000, as we noted midday, also having trouble here. It's stuck below the volume weighted average price from the low of late last month and off that peak. We were looking for it to rally in here. So from this failed break higher could come a fast move lower, and that's something we always have to be aware of. We do still have a primary uptrend, which is why you don't want to get aggressively short, but we've seen that this level of prior resistance had been holding as support, and now that's broken. So in this case, a measured move would take us from this peak here, we'll call it 173, again to be conservative, and we'll call that 160, 170. So that's about 3 points. Take that from 172, and that gives us a measured move down to 169. So not really anything dramatic there, but if we were to see continuation, it could get worse, of course. We are below a declining 5-day moving average, so in the intermediate term, we have to look at this as guilty to proven innocent, especially after breaking higher and failing to hold on to those gains. Semiconductors had a little bit of weakness, and this group has been really neutral, as we've mentioned, for the last couple months, but in that neutral range, it's a pretty big range and a volatile range. I think that it's just best left alone. Biotechs, we were looking for a potential recovery here. We did not get that. Instead, the sellers have stepped in. Now we have to look at this market with a high level of suspicion. We've broken below the volume weighted average price from that gap. And from this low, you can see that we're also below that as well. So looking down to a 30-minute time frame, what we were looking for is a potential bullish scenario, obviously failed to materialize, and now we're back below this volume weighted average price as well. From an intermediate term standpoint, you have to give the benefit of the doubt to the sellers rather, until we can get back above and hold above 118. That's just to get it neutral. That does not make it positive. There's no reason to be a buyer in here of the biotechs. They look vulnerable. We do have a rising 50-day moving average, but on an intermediate term, We have lower highs and lower lows. We have a failed break higher in here, and we have this market back below support, indicating that things could get a little bit more serious to the downside. Financials still kind of holding at that year-to-date VWAP as well as the 200-day and the 50-day moving average. So not a lot happening in this group. Looking at a 30-minute time frame, we do still have a declining 5-day moving average. That tells us, not to buy it. And this fact that we're just holding at a potential level of support doesn't give us any reason to do anything either. So theme for tomorrow would be we need to be pretty cautious.